Good afternoon, guys. Welcome back. What an awesome day today in terms of at least our positions and the way we were set up. I think you could call it an awesome day in general, anyways. No matter what, I think it's pretty interesting to see the way in which the market can decide one thing one week and then change its mind the next, or really just go back to normal is kind of the way it looks like. This idea of being on a trend, and even when we have pullbacks, we gradually find our way up there, or we do something like today where we just explode to it, which has been sort of the norm, which is why we made the argument to continue to buy every pullback. I'm really happy with the way we decided to tackle this pullback from last week. And I think it again goes to show the ability to use your confidence and use some discipline to actually profit off of a situation that others are maybe trying to find out a solution to. Maybe they want to wait to see. I'm sure a lot of people last week said, let's wait to see. I even said it a few times. But when we think about it, it's always the same, right? It's not really that different. And so what we did was use our ability to buy on a pullback and set up our portfolio in a way that allowed us to allocate risk over the weekend, which was to not only push growth positions and expect continued highs from growth, which they did. We also bet on value not to be as bad as it was. We had value pull back all week from the FOMC day, and we said, you know what? We're going to put a position on over the weekend. We did not put on a 3-month position. We specifically had something that would get exposure to today. And I talked about July monthlies. We did that across the board, specifically banks and energy. If we look at it, so S&P today, 1.5%. The Dow really did the best today. Nasdaq was a little bit slower. We look at energy. Energy did 3%. You put July monthlies on, you had quite a day. And it really begs a question again of what exactly were others thinking when they sold here? Because I bet the same people that sold at a low now bought at a high today. This, I think, should be one of the best lessons from understanding how the equity market tracks another market. We talked about how this energy, sort of, when we look at the ETF as a benchmark, this benchmark tracks oil itself. When we just look at crude futures, for instance, crude futures have continued to rise. Non-stop trend. The price per barrel just keeps going up. Yet we had a pullback on the equity side because of this need to rotate out of value to go into tech, right? We wanted to buy growth. To buy growth, you need to be able to buy it with something. So people took profit on basically what they thought, which has done the best so far this year. Again, energy's up about 55%. And so they said, you know what? Let's take profit on this to go put it into growth. And then, yet this has still continued to climb. So what's going to happen? You're going to get a major snapback to go track basically that average. And that's what's happening. And so it does not take very much for us to do that. The point that does take something is not to go put a long position on, but to take something that's risky and you're going to profit on it from today. So I'm assuming people saw those. That was a great trade. So there's something to be happy about. Celebrate, a nice trade like that. Again, everything is green. Everything's green. It's where you put it, right? It's in what positions did you take, right? Banks, 2%. Thought interest rates coming back were good for banks, right? Well, market didn't think so. And so we took some profit on banks to go, what are we buying? Well, we're going to go buy tech, right? This was a nice trade from the weekend as well. And so we saw that as well. Obviously, the entire value side was up. Here's the NASDAQ. Again, continued to move. Again, FOMC was good for tech through there. We're at all-time highs still on NASDAQ, so same sort of price point. If we look at the mega caps altogether, it was a pretty good day. Apple did 1.5%. This was a really nice day in terms of movement. Amazon was down, but again, this is, the charts, if you look at them, they're all sort of moving on some sort of average. Amazon had the largest sort of and sharpest move, so the take profit here is not really something to worry about because, again, look at the lows. Microsoft continued almost 1.25%. Google 1.5%, catching back up since again it also had to slow down because it's been leading the charge again in terms of tickers. And if you think of like pound to pound, Google has gained the most. It's gaining more than energy on the year so far. So Google's been an absolute nightmare for people that don't like growth. Facebook, decent enough day, and Tesla was sort of just sticking around. It's possible tomorrow we're going to get that entry that we're looking for. As I said, there was nothing wrong with entering it today as the market started to swing back up, but I'm just not really a part of that school of thinking that you should be buying something like this until the momentum is there, right? I do want to show the Dow. So again, the Dow sort of had the best day out of the indices, doing almost 2%. Looks like we're there after hours now. This was also an expectation, and also how we were able to say, okay, if banks and energy are going to go up, the Dow is going to go up. And all the tickers in the Dow track the Dow. They just sort of trade the same. And so if we look at the Dow tickers, they had a really nice day. When we think of value, we think of the Dow. And so when we look at these, again, energy being there, but we saw things like TRV, which travel's been doing well. Why is this down? So this did well. IBM came up. Cisco, CAT. Again, you just sort of are starting the move, which again, you can't really take it, most of these charts or most of these as like a trade, but it's about the idea that again, a pullback happened, but we saw the point at which we could really take a lot of the trades, right? And so I just wanted to point that out, that most of them were pretty straightforward in terms of the way in which you take them. And again, if we think about sort of this day, let's take a look at it on the intraday. Beyond the moments that started the day with some selling on growth as value really went bid, it was a really straightforward day. And there wasn't much. We were watching this interaction with watching the SPY with the 420 in the trend line. And we talk about how coming into today, we expected price to gravitate to that point and then to trade through it. It did just that. I found it a little funny how it actually followed how the intraday trend line kind of works here, which this is the usual pace of the market, right? And so it actually followed a very average pace. We never took profit towards close, nothing, right? That's just kind of showing how we're actually trading on the trend. And so I'm sure we'll see this tomorrow, this continuation of the trend. In some sort of respect, again, we're kind of in this weird spot where value now has points to grow or come back to retrace to where it was just a week before. And growth is in all-time high sort of mode. It's going to cause a lot of bid. We are very bid. We were bid last week. We were all-time high all last week. So again, a lot of this was, I don't know, people showing some emotion, some opinion, right? It's why we sort of just stay disciplined and stick with it. And I think, there were some people that thought that the market was down, and I don't think it's so much they looked at the market, they looked at their own positions. And that should be enough to say, oh, if my positions are down, then I'm probably not in the right positions, which is what we do no matter what when we take a trade. If our trade goes red, we're not in the trade no more, right? So I think you saw maybe, and from opinions from people you might have talked to, you might have seen the differences and kind of it's always a good thing to see what other people are doing and thinking, to compare and see where we are. And I think I've said it for a long time now, we're in a very good spot. We're in a very good spot. We have a very good understanding of what's going on, and it continues to work. And so, we're going to stick with it. And I'm pretty happy. So I'm pretty happy. Looking at some individual charts, we have some really interesting trendline interaction we saw today at some of the top of the list. So again, if you look at the list from what we looked at, we definitely had some things that put points on that just kind of show how the market's doing. I like this EVRI move right on the trend line today. We've talked about the casino angle for a little bit, but just like this, again, idea of some of these charts that have they're so technical. There's nothing else to them. You don't even care what it is. You don't care what it is. It's just the way in which it trades. And so looking at these, it's always nice to see charts continue months later that interact with the way in which we look at levels. And again, it's not even something that actually existed, right? I put a trend line on something that, some of you sometimes will be like, I mean, what are you even drawing a line on, right? Like, what are you actually drawing a line here on? And I obviously understand some of the arguments there, and sometimes I am just I'm kind of just going a little far with what I'm doing, and yeah, it's going to happen. But then there are times when we get very clear interactions with trend lines from months and months before that were really not a trend line back then. And it's important again to understand how you're using something that's actually there in price, and you're not using, again, maybe the Fibonacci idea to try to find where levels will come later on, and trying to use these things that they're not really they're not really true to what people say they are, right? And so just to continue to reiterate, the way in which we find these levels and then we use them, they can specifically be used for trading in a different way. I think, again, the SPY example today, you guys have seen a lot where you have those two converging levels of supply. But again, sticking to our method and utilizing it is such an important thing, because sometimes maybe a week like last week, you could have been down in the dumps and you start to lose some confidence, and then you see other people that are doing well and you feel like maybe they just got lucky. uh, Again, it's not luck, it's continuing to do it over and over every single day. And so again, just those of you that have been working hard, fucking, you deserve money that you make. So again, it's not so much just being a part of the market. It's actually, sticking with it, staying disciplined, understanding that uh, you know, we're a part of a thing that a lot of people are doing, and we're trying to do things in a different way, right? We're not trying to use little shortcuts and everything else. It takes a lot of work. So those that put the work in should definitely be the ones that reward or get the highest reward, and it's worth it to celebrate it, I think. So just want to put that out there, because I know a lot of you guys have been we've been in this, well, technically, we missed the anniversary. I think the anniversary was like a month ago, in terms of when this group started. So definitely shout out to you guys that have been sticking with it. Otherwise, looking at individual tickers, a lot of the list is sort of overpowered by oil and energy. We have a lot of different bios that sort of popped up as well with healthcare. Specifically, healthcare on the larger side, we saw do very well. We saw REITs do some interesting things today. Again, I would say that the idea that value went away was, well, I think we talked about last week. It was really sort of an interesting response to act like all of a sudden that since something is going to change in 2 years, that we're going to stop buying something now. I, of course, had my own opinion on it, but we saw the market today react in some very clear sort of ways. Okay, here's American Express. Here's like a very volatile but clear decision that was made, right? We had a rally. So we were trending rallying because we're buying some tertiary finance sort of ideas, right? Not just major banks, but things on the spectrum and credit, and everything else. And then FOMC happens and we sold a lot of these. And then today, what did we do? We said, what do we do that for? Or maybe this candle here is the rest of us pointing and laughing at the other group. It's very hard to tell. But again, we can easily look at today and you look through charts and you see that. And I think a good way to look at the candles over the last few days and from last week is just to take the behavior and what people are thinking, and you can really see the opinion, because it was pretty clear. It was pretty clear when you look at some of these charts. Pretty clear that whatever the response was purely rotational, and I would just erase anything that we saw those last few days in terms of opinion, and now we're back to where we were. So again, we rotated more to growth, but it was not so much a rotation for overall as much as it was for, again, being more risk on, which we've been more risk on for a few weeks now, maybe a month now, and have been also picking up more and more risk as we've gone on. It looks like the market is also doing that, but it's kind of like having a lover that has a really funny way of showing it, right? Maybe they don't really show you what they mean, but they feel it. That's what we had here this last week or so, I would say, right? And so we do need to, in some ways, wait to see what some of the rest of the response is, because I think a lot of traders and maybe some of the institutions out there that rotated sort of unbeknownst and unknowingly are seeing now today that, okay, maybe we were a little quick to do that. because no one else thinks that. Obviously, if the markets did what it did today, then no one else thinks that, right? So, uh, yeah, I think we're in for a really fun week. It's very bid. I don't see this week stopping. I think we're going to be very hot, all-time high. I wouldn't be surprised if S&P goes to all-time high. Um, it's just that's just sort of one of the things. Looking at blue chip names, BA did very well here. I was trying to find BA and GE without having to. I was trying to go through tickers, but so BA, we talked about some of these tickers that pulled into support. Very nice move from Friday. 3.5% today. That's a great move on something like that. That again just kind of shows the erasal of what happened the end of last week. GE, the same thing, but this was a lot. This was a position that we were very intrigued with to begin with when we took the trade from back over here, and we had the converging levels of supply that we looked at as a rejection. And the pullback, we understood that we were not going to be again taking a this is a flag, so let's buy it before it breaks. We understood that we were going to need to be waiting for a break, and this had been pulling back, as again more and more was switching into growth. This was the kind of thing that we understood was being left behind, right? And so it's going to be interesting to see after a day like today, again, buying at the low end of a range. It makes sense why people bought it here. And we talked about it Friday, why it should be bought. It's going to be interesting to see what some of these now do, because if you compare something, I'm going to use an example here, which is they're very different, but here's GE, right? It's been just sort of shading in a range, but every time it comes to the low end of the range, I know there's a lot of lines. Every time it comes into the low end of the range, it swings up, right? What about our old friend Netflix over here, right? Well, today, Netflix didn't really go bid, right? It kind of started bid. Netflix, every time it comes down to the low end of the range, it swings to the upside. So today, value kind of won out on these low end range trades. And I think it does beg a little bit of a question, because we do have at least half of the growth side that looks like this. It has not been trending up. It's been at a low. We've been looking at a lot of these charts. They've been at a low, and really haven't been at a high since January. And we've talked about them. They've downtrended since January, and we're looking for the consolidation, the breakouts. Tesla, for instance, as well as a big name. And then the other COVID winners. Today, we didn't really see them get much of anything. And you have the other charts that are value oriented that are at the low end of a range that are swinging up. And so, again, when we talk about this rotation from last week, it's important to talk about, well, how much? How much are we really changing? And how much are, again, when we talk about inflation, it didn't go away. It did not go away. Inflation did not go away. We're looking to bring back interest rates sooner, which is going to be in 2023, in 2 years. Sooner rather than later in 2023 instead of 2024. That does not make the inflation we have right now go away. The next time we see inflation numbers, they're going to be up. The economy is going to be hot. People are going back to work. Those things don't go away. And so it was, again, it's not that you can't buy tech into a good economy. That has nothing to do with it. But it's almost like some of these things happen because there was fear. And again, it's this not understanding inflation. I think we talked about a little bit earlier today. I don't know if it was, I can't remember. Spoon, I think you brought up. It's very strange what's still happening, and it's also a little worrying. I saw on Bloomberg today that a bunch of you had some of the big hedge fund names, and then some of the very well known economists that they're not just economists in a general sense; they're actually tied to a firm as well, some sort of an institution. They came out and talked about today how the Fed should be tapering right now because inflation is such a risk. I don't know where this is coming from, and I don't understand what the point is of talking about. Like, we should always be aware of risks, right? And we should be prepared for anything, right? But some of the angle that's being taken on is, to me, from again being an economist myself, just feels so it doesn't feel right. It's not unbiased. It feels very biased. And so the more I see biased sort of views, the more I realize that people are positioned in a very different way than sort of I am in the way we've been talking about things. And so when we start to think about, okay, if they're thinking about inflation as being this fucking just, I don't know, it's such a bad thing. They don't actually care because they have money. It's their positions that they care about. So what are the positions that they're in that they want the Fed to taper so quickly? Are they still over leveraged on tech and tech has been trading sideways for 7 months? Is that actually what they're worried about? Think about it. If we go back to NASDAQ, right? During COVID, this shit was all-time high instantly. Took 3 months to get to all-time high. Didn't make sense, right? We went with it because it'd be crazy not to trade it. And then what happened? Well, it traded flat. We look at something like Amazon. It traded flat for fucking months, almost a year. Traded flat. Is this what they're still complaining about? Is that they haven't moved? Everyone else is making money because they're passive. Again, something that's so important to understand right now is this active word, this active investing and active trading, which is what we do. These passive investors, they just put on big positions and fucking wait. But what I think we're getting at is that there's people out there that have not made money in the last year. They made money very quickly over here, but some of them were slow to get in. Maybe they started getting levered up here. Apple and Amazon again doubled in value in 2020. They doubled in a few months. They doubled in price. They're doing Apple did a split, doubled, right? Are we getting this sort of again before the blue wave? Remember the blue wave trade? Before the blue wave trade, we were very leveraged into tech and we were not trading value yet. We were trading sideways across the market. Value was still sort of bad. It almost seems like there's this sort of group out there that really needs some points because they keep saying this inflation thing, or they're old boomers, old men that are apparently thinking that it's better for the rest of us to not let our economy do well. They're like, you know what? Fuck normal, everyday people in their economy because it's not good for me in my position. And it seems like a lot of whining. So it is important that we pay attention to the price in front of us and not what these other people that, yes, albeit billionaires and people that have money and smart people, we don't so much look at what they're complaining about and fearing about because it doesn't impact our decisions right now. It may impact their decisions, but guess what? They keep complaining, so they must not be making money. We don't complain when we're making money. It doesn't make much sense, right? And so I think what's actually happening is we're seeing the passive side of things really lose out to what's happening right now. And so they're trying to get this changed back to what they had before. And so I want to keep up this sort of idea that it's active investing and trading that's doing well. Passive is just doing blah. It's just whatever. You're getting a gain, but you're not getting what you want because there are changes that are happening, and as a passive fund you can't change very quickly, can you? And so all the things that are actually happening again I think are from a different group of people. And so when we see reactions in the market, we need to understand who's reacting. It's not so much that group, right? And that's why we can see things change so fast because people can admit that they're wrong. People can admit that they were wrong, and so someone that sold here, maybe they just bought again today and said, you know what, I was just being careful. Some people were overly careful and sold, and they were able to buy back in. There's nothing wrong with that. Absolutely nothing. And we did the same thing. Think about banks, right? We had to sell out of banks, but we'll also buy back in. Like these things are so important. So I think from the macroeconomic side, when we think about inflation, we should think not about we're going to think about others, but when we talk about making decisions, it's only about ourselves. How does that impact us being smaller retail traders? How does it impact us? Not how does it impact a fund, because all we're going to hear from them is how bad inflation is, but that doesn't help us. That doesn't actually get to the root of whatever is going to happen. How do markets move when there's inflation? My argument for the last few months is that inflation leads to higher equity markets. That's all we've seen so far, so it's the only thing that has happened. Everyone else was saying that it's going to make us go down. It doesn't make sense when they're bullish. What are they telling us that for? So again, We have Powell testifying tomorrow. We are going to hear a lot of old white boomers ask the same boomer ass questions about inflation and how all this spending is leading to the economy doing better, but that's just too hot. And that's not a good thing, right? And they're going to probably trap him into questions that ask something like that, as in, well, isn't inflation technically bad if we can't control it? And he's going to say yes. And so they're going to say, well, if we did less spending, wouldn't that mean less chances of overheating and inflation? He's going to say yes. And so then they're going to get the same fucking satisfactory answer that they want, that inflation's bad, right? That's not the case. Right now, inflation means coming back from a COVID low. We're coming out of a recession, which actually happened, that a lot of people don't acknowledge, that a recession actually happened. When you close shit down, you're in a recession. We got it back, and we're now doing better than we were doing even before COVID in a lot of respects. The equity market has been doing fine anyways, right? It's just important that we put these pieces together and not let sort of these very specific opinions about really inflation towards their own positions not creep into ours. And we're going to stick with what we've been doing, right? That's the biggest thing. We stay disciplined, stick with what we're doing. We look at every chart as just any other chart. We don't care about the name. We don't care about anything. We trade it based on price. And then we use really our macroeconomic thinking to sort of set some biases that help us catch things a little bit faster, right? Because we've been doing very well. So keep us on pace. I'm sure some of you might have saw some of those articles pop up today as well. So wanted to touch on that because, again, you get those little sly bastards out there. They just want to take all of our money, telling you, or they at least they want Congress. I know that they released that shit because they want Congress to ask the questions tomorrow to Powell, and he's going to get stuck asking boomer questions, or answering boomer questions. So putting it there now because we're going to see that tomorrow. Can almost guarantee it. So otherwise, awesome fucking day, guys. Really happy to start the day or start the week like this. After hours keeps going. Everything's on, right? We're buying everything. We've been doing short-term positions. Almost everything we pushed over the weekend were July monthlies. So we're really in it. If you didn't have a great last week and maybe you didn't even buy anything today, we're traveling through all-time highs on the NASDAQ right now. Values sort of bouncing back, and that's still a question mark to most of the market. S&P looks like it's coming back to all-time high. You have plenty of chances to keep going. There's nothing wrong with taking trades. You can get out of them pretty quick right now. Retail's still buying. It's 1% to all-time high on the S&P. So, again, we're very bullish. There's nothing in front of us there is no correction potential. There is no correction event. There's nothing like that in front of us. So we continue to buy pullbacks like we just did, and we continue to buy through the highs. We're looking for a new high every day, right? That's what we want, and that's what we've got so far. So enjoy your evening, your night, wherever you are, and I'll see you guys in the morning. Watch out for the charts. Gonna have some more charts to come tonight, of course. So I'll see you then. Enjoy.